Hey, what's going on, guys? D. Anthony here with Evolution Traders. I want to go over my strategy, review some of the setups that kind of took place this morning, kind of show you guys exactly, where you could have capitalized on some potential trades, maybe where you did take some trades and maybe some opportunities where you could have held for a little bit longer, or maybe cut a loser, this, that, and the other. So what we're looking at is a 5-minute time frame. We're looking at the NASDAQ futures, which is NQ. What I have marked out on the chart right now is just a 20-period moving average, so the 20 SMA. I've also got the first hour highs, kind of correlated that with overnight highs. And then I've got those first hour lows. So first hour lows is going to be 30 minutes after the market is open. So for me here in California, between 6:30 and 7 a.m. So that first 30-minute window is going to be when that first hour candle closes. Now, what I really like is some of the A+ setups that I take, not only on futures, but on the option side of things, is when we get a breakdown either through pre-market lows or through those first hour lows, that is also correlating in an active or current 20 SMA play. So if you notice here, I've got these first hour lows sitting down here at 17,670. You can see here that we were in an active 20 SMA short play. Now, what is a 20 SMA play? If you guys are new to the channel, it's just a momentum drive play. So anytime we're trading over the 20 SMA and then we lose that moving average and kind of close below it and confirm that price action, that's telling you that there could be a short-term change in trend. So notice how at 6:35 in the morning, we get that close below the 20-period moving average, and we get that following candle to kind of confirm those lows. Now, again, you can be a little bit aggressive here and kind of take this initial scalp. You would have made some decent coin on it. It was a 36-point range. Obviously, that paid full in a 1-to-1. Now, do you have to always take profits at 1-to-1? Of course not. As long as we are still trading below the 20-period moving average, feel free to hold those remaining running contracts, but I always like to kind of take profits off at least at 1-to-1. So just understand that, if you're trading multiple contracts, you're always going to want to take at least something off the table at 1-to-1. What you decide to do from there is your prerogative. Again, it's your account, your money. But if you notice here, once we do start to confirm, right? So we get the breakdown here at 7 o'clock, we get the breakdown through the first hour lows, and then you get a following candle to kind of confirm that range. Not only is it confirming the range of the first 30 minutes, that first opening range on the hour candle, but it's also confirming overnight session lows, and it's also an active 20 SMA play. So we have three confluences that are all working together. We've taken out overnight session lows, we've taken out the opening hour lows, and we are also trading below the 20-period moving average. So those three things that align perfectly is giving you nothing but green flags to enter that trade. So again, whether you're an aggressive trader who wants to take the first initial breakdown, or you want to wait for the confirmation on a following candle, the only thing about taking the first initial breakdown is analyze the risk. It's a 53.5-point move, which obviously paid at a full 1-to-1. However, normally when you break down some type of range, previous day low, opening hour lows, overnight session lows, once you do break down, you always put in that new price, and then price tends to retrace. So just be careful if you do take that first entry. Price always does retrace. Again, your stop loss would either be the reason why candle's high or a close back over the 20-period moving average. So the next way that you can kind of take that trade is by taking a following candle that confirms the breakdown. Now, if you look at 7:05, that would be your confirmation candle, 7:05 Pacific Standard Time. You would enter in on this particular candle when we do break those previous lows. And you would sit in this until you get a full 1-to-1. This is a 32.5-point range on the confirmation candle, and it's a 53-point range on the reason why candle. Now, depending on whether you took the reason why or you took the confirmation is going to depend on where your 1-to-1 is going to be at. Either it's going to be around 30 points or it's going to be around 50 points. Again, these are points, not ticks. So with that being said, you can see how this plays out, and you would have been able to take a nice little trade. Now, I took a quick little scalp on this opening drive play here when we confirm the first hour lows. I only took it for a few, made about 200 on the move and just kind of got out. Again, working on a funded account here, so I'm not really trying to, you know, catch a bunch of big moves. What I'm really trying to focus on doing right now is building up that balance so it can have a cushion, so I can start increasing my size. You know, once I get that balance over $2,000 or $3,000, then I'm going to start to kind of increase that size. Right now it's sitting at around $1,200 in profit. So again, you know, not enough to take a payout on it. It's not worth it to take a payout on it yet. So right now I'm just going to focus on building up that balance. Now, if you notice, once we put in this, you know, first leg kind of trickles around, second leg, we get a little bit of a reversal here. Now, this is a strategy that I teach, taking this trade here off the bottom. I teach this in Evolution Traders in the mentorship. By the way, guys, on the mentorship, I'm only leaving it open for 3 spots. I'm actually thinking about closing it down for the remainder of the quarter, if not the next 2 quarters, just due to the fact that I do want to, you know, really focus on the traders, the existing traders that I do have. And also it's very time consuming to work with, you know, a lot of traders one-on-one, especially with, you know, taking phone calls and doing the coachings and this, that, and the other. And I just see that a lot of people are just kind of looking for some type of magic, you know, lottery ticket, and that's not what this business is. You know, I'm actually thinking about increasing the price 3, 4, 5x, not just because of the money factor, but I want to make the barrier of entry very high for those who do, you know, decide to join. So if you do, you know, been on the fence about thinking about joining the room, I'm gonna give you guys one last shot to kind of join. If not, that's completely cool. I'll continue to do my thing and focus on the traders that I do have, because they are my #1 priority. This YouTube stuff, I basically just do it as an online journal, obviously going over my strategies that I trade and kind of going over the market. So sometimes when I notice things and I see things and I want to back test, I use YouTube as a personal back testing for all my strategies and for everything that I always work on myself as a trader. Now, the next trade, you know, I'm not going to get into this bounce play here because this is something that I teach. You know, there's some specific things to kind of look for here, but you'll notice here we have another active 20 SMA play here at 8:30 in the morning. We get this surging green candle that kind of takes out this previous little swing high here, kind of breaking this downtrend, closing over the 20 SMA. We do get the confirmation. We also get the back test of the 20 SMA. So you're going to kind of have to stay and hang tight in there. It's a 32.5 point range. It does also hit for a 1-to-1. So essentially, even if you took the 30-point move up here or the 50-point move, you could have essentially, if you did take both trades, taken at least 50 points out of the market. And if you did take at least 50 points out of the market right now, you should not even be looking at this price action that's currently going on, because you should be more than content with the gains that you made. Now, if you're a type of trader who says, well, I only traded 1 micro contract and only made about $80, or I only made $70, nobody's fault but yourself, because, you know, is that like necessarily a bad thing that you only made $100? Of course not, right? It's just you're at a different stage of the game than someone else. Someone else could have taken 5 mini contracts and could be sitting on thousands of dollars worth of profits. Again, there's no right or wrong way to do this business. The only right way to do this business is to manage risk and to make sure that you are making money. Because if you are not making money, you are doing something wrong, and doing something wrong needs to get changed immediately. So if you can't identify that whatever you're doing right now is not making you money, you need to aggressively and quickly fix that, because there's no sense in showing up each and every single day, putting this label on yourself that you are still learning how to trade, when there is plenty of free resources out there where you can learn how to trade, and paid resources where you can hire a coach, a mentor, a community, get access to courses, or whatever you guys would like to do. There's more than enough information out there to kind of cut that learning curve literally down to like 30 days. And then from there, it's all about understanding who you are as a trader, emotionally, psychologically, this, that, and the other, to understand what your personal pain points and triggers are. What causes you to go on tilt? What causes you to get stressed out? What causes you to, you know, get overly confident? Those are the things you really need to work on as a trader. It's not necessarily the strategy. It's not necessarily learning how to read these candlesticks. This is easy. You can teach anyone how to read candlesticks. That's not hard. If I put 100 traders in a room, given them, let's say, 1 or 2 different strategies, I can almost guarantee you that at the end of a trading day, each and every single one of those 100 traders, even though they're following the same 1 to 2 setups, will all have a different number on that P&L at the end of the day, because that's what's really going to show you the difference in emotions between different human beings. It's far more complex than just understanding a strategy. Again, for those of you guys who don't really want to believe that, and you want to believe that everything is just a cookie cutter kind of, mold that you can just plug and play, you're rudely mistaken. And again, you need to hear that, because this is coming from someone with 9.5, 10 years of experience. This business is not hard, or is not easy. It is very, very hard. However, it doesn't need to be hard. You're going to have losing trades. You're going to have losing days. And in fact, you should be excited about losing trades and excited about losing days, because those are the days where you're going to learn who you are as a trader, what really makes you tick, and what really makes you, who you are as a trader, because everyone is different. And again, because this is a probabilities-based business, you need to work through the losses to get to the wins. You're never just going to have win. Although you can have a string of winning trades, you can have a string of winning days, 3 days in a row green, 4 days in a row green, 2 weeks in a row green. And then what happens when you deal with that one red trade or that losing day? How do you handle that? Because it's when that happens is when traders start to go off the rails. So again, those are the things we need to focus on. It's not the strategies, because just looking at the chart here, it's easy to say that you should have been short here, and it's easy to say that you should have been long here. But what are the things that you are looking for as a trader? And are you actually looking for the right things? And are you mentally prepared? Because the person who sits there and is going to say, well, it's easy to say that you should have been short in hindsight, it's easy to say that you should have been long in hindsight, is the same person who doesn't know what they're looking for on a day in, day out basis. And they don't want to believe that it's that simple. It is that simple when you're managing your risk appropriately. Now, if you're being, a maniac and you're trading 10, 15 contracts, 5 contracts, and you're just trying to scalp short and scalp long and scalp short, of course you're not going to find any success. Of course you're going to have big winning trades followed by humongous losing trades. It's because you're not managing your risk. And if you're not managing your risk, you're not managing yourself as a human, mentally, emotionally, psychologically. So again, those are the things that traders really need to focus on. And I wish that more people would want to actually get in deeper to trying to figure out what it is that is causing them. Like, there's a root problem that's causing you not to make money. Because again, if the sole purpose of this industry and of this business is to be a shark and to make money, and you are not making money, why are you doing this business? And I don't want to hear that, well, I'm in the learning phase and I'm trying to learn, the best strategy, and I'm trying to learn how to read candlesticks. That's baloney. We can take a weekend and we can learn 1-2 setups that are going to make you profitable, but are you actually going to do what needs to be done? When you're not given an opportunity, meaning a setup in the market, are you going to sit on your hands, or are you going to look for some other type of setup just to get in the market because you want to be in the market? That's the problem that a lot of traders have. They know a strategy, it's not showing itself on the charts, and then they start looking for other reasons to try to take the trade. They start trying to justify why they should be getting in short here, or why they should be getting in long here, versus sitting on their hands and staying patient, waiting for their setup to happen. So what's really the problem? Is it the strategy? Or is it you? Again, this is something that I dive in a lot deeper inside the room through the one-on-one coaching and mentorship that we could definitely do. Just want to kind of toss that out there. So again, I'll see all of you guys on the inside who do decide to take me up on a last minute offer. For everyone else, I will continue to put out these YouTube videos, but just understand that these YouTube videos are through my lens, my eyes, my experiences, and my strategies. So regardless if you agree with them, disagree with them, use them, try them, is on you. Again, the way you trade, the way you have seen others trade, that's fine. There's no knock on anyone else. Everyone has their own personality and their own style and their own ways to trade. What I want you guys to get through your heads and your eyes and ears is that there's a lot of ways to trade, and there's a lot of different opinions, and there's a lot of different ways to manage yourself as well as your account. So with that being said, be open to learning, because especially if you're not actively and aggressively taking money out of the markets and putting it into your pocket, what are you doing? You are then wasting a lot of time. We are not in this business to waste time. We're not in this business to try to learn and let this learning phase take 3, 4, 5, 6 years. We can cut that down in half, 30 days, 60 days, 90 days. And then from there, start to work on yourself as a trader to see what we can do to get better and more profitable. I'll see all of you guys on the other side.